Okay, so hello everyone. Today what we're going to be getting up to is basically showing you a very special technical analysis example. So the big reason why I'm doing this technical analysis example is a lot of people have been asking me how I'm analyzing my positions and how I seem to create such great long-term position analysis. So what I've decided to do is do this video right now. What we're going to be focusing on is just the technicals of this trading pair that I'm going to have a look at, which is NZD CAD, and it's actually a pair I am currently trading. It's also a pair I've made quite a bit of money on. I've shorted it and gone long in the past couple times throughout the last 3 months, and I've been focusing hugely on Canadian currency pairs as of late. So just to introduce myself to you, my name is Morgan. I'm the founder of MS Equities Trading. I run an investment group, and basically what we do is we teach people how to trade around the world. I teach people in over 25 countries around the world. I also run a hedge fund, so I invest and manage the portfolios for clients based around the world in the financial markets. I also run an algorithmic research group, so what we do is we build specialized algorithms that assist us in trading in the financial markets, and we're currently building a quant fund as well, which is also very exciting. Last year I also run private equity investments and property investments. So basically in this video, what I'm going to be doing is focusing the spotlight on technical analysis. I'm not going to be focusing too much on macroeconomic analysis, political driven strategies, anything to do with other asset investment strategies. So as an example, the US crude market and the Canadian crude oil market in Canada is going to weigh a lot on this position, but we're not going to have a look at that. We're going to just focus on technicals. And what we're going to be focusing on is a weekly pair that is showing an average true range. And basically what I'm going to show you is exactly how I've analyzed and capitalized on this average true range opportunity. And also talking to you a little bit about why I've come up with this opportunity. So what I'm going to do is show you on the screen exactly what's happening. So what we're going to do is move from the left of the screen all the way to the right. We're going to start off with point A. So as you can see, what I have done is I've effectively drawn out everything we're going to need to talk about in terms of these positions. What we're going to be focusing on is a few different points, but just take it step by step. What we're going to do is go through it from the points A to E. So basically what I've identified is that the New Zealand dollar CAD is ranging very, very strongly on the weekly time frame. Now, depending on what time frames you go to, obviously you're going to see that the market is trending a huge amount on the smaller time frames, and obviously that is shown here data going all the way back from 2014 to 2017. So we've got about 4 years of price data that we're showing in the charts here. So that is very substantial data showing that the market is ranging very, very heavily between these price levels. So basically what we're going to show you is exactly how I'm analyzing the difference between average true range trading and maximum true range trading. So basically, in terms of average true range trading, what we do is we take the distance that price has traveled from point to point on multiple different levels inside of that range, and we average it out. It gives us an average number. So if we have a look on the chart, basically you can see there's A, B, C, D, E, and these point numbers are basically measurements in pips. So basically, as you can see here, point A, we have a very, very strong sell-off going from this point all the way down to this level here. And you can see I'm measuring wick to wick. I'm not measuring body to body because on a weekly time frame, the wicks are incredibly substantial. So in terms of the wick to wick measurements, you can see point A has identified 1,050 pips that price has moved. So as you can see, this orange line over here is just basically showing exactly the distance vertically. So basically that just allows us to measure it very closely. And then the trend line at least allows us to show the period. So this has taken 30 weeks to move. And then in terms of basically showing you where the price has moved back to. So as you can see here, what we've looked at is this price not on this trend, but this new trend B moving all the way back down. What I've basically done is shown that it has moved 1,570 pips. It's a very, very significant move because as you can see, it's moved much lower than this previous low here. As you can see, there's a very strong move all the way down of 1,570 pips followed by an incredibly strong recovery back up to 1,430. Now, the very, very significant point of this retracement is that followed by this retracement, the price level on this red trend line is rejected very strongly, and price moves all the way back down to test the previous level. So if you would invert this graph here, you'd see it's an inverted head and shoulders. So basically what we've got here is the A to B to C, which is the first shoulder forming, followed by the long head forming and a second shoulder right here. So that is a perfectly inverted head and shoulders. This is incredibly important because it's showing that there is very, very strong price structure. So basically price structure, technically speaking, allows us to identify the probability that price is going to retrace and hold a very, very strong technical structure. So what this allows us to effectively do is know that if we're actually going to be trading this position, there's a high probability it's going to go well. So as an example for myself, trading New Zealand dollar pairs, I've done incredibly well trading, as an example, the New Zealand dollar Japanese yen and the New Zealand dollar CAD. I find technically they obey price levels incredibly well and price structure. On the Canadian side, I know a lot of people can also share this idea with me that the US dollar CAD has very strong technical barriers, as well as CAD CHF and New Zealand dollar CAD. Technically speaking, these tend to form very good price structures, very good structure in terms of formation structures over time periods, as well as in terms of its momentum. When the momentum dies out, price retraces. So that's also very important for us to identify here. So as you can see, perfect head and shoulders forming, followed by a 1,320 pip move all the way back up to the top. So as you can see, this previous sort of half, average resistance level over here has been completely broken, almost in the exact same direction that it has been broken here. And this could be a very good example of a Gartley. So if you have a look, we've initially formed a head and shoulders that's immediately formed back into a Gartley formation, where you can see prices move much lower, followed by sort of a bit of a mid-range between the two, followed by a very strong price movement all the way upwards. So what we're seeing here is there is a perfect head and shoulders followed by a very nice Gartley move, and now it's moving back into a little bit of a volatility range, followed by a very strong sell-off. And what you can see here, this very strong sell-off has made us identify one thing. Well, a few things for that matter. Number one is if we measure all of these points here, point A, B, C, D, and E, you can see that it's about 1,050 pips, 1,570, 1,430, 1,320, and 1,140. If we add up all those numbers and average it out, we're looking at an average true range on the right-hand side here of 1,300 pips. What that effectively allows us to identify is that we know price action is probably going to move within these barriers, because on the last 5 occasions, it's averaged 1,300 pips move. Now what we do know is the sell-off on point E, which is the current market price, has moved 1,140 pips. So this helps us understand that we are 157 pips away from the limit of the average true range. Now what this also allows us to identify is understand that we're probably going to be coming towards a very strong momentum barrier. Now, as you know, what I use very, very often is an MFI indicator to help myself identify when the money flow index is either oversold or overbought. So as we can see on the stochastic, both on the stochastic and the MFI, you can see right at the bottom, is very, very oversold. So what this helps us also identify is price has become exhausted. So we're not only moving to this very strong support level on these 3 points here, we also are moving to the limit of the average true range. And point number 3, we're also moving to the limit of the MFI. Point number 4 on top of that, which I don't necessarily might call a strong point, is we're moving to the limit of the stochastic. The reason why is because I've seen stochastics can tend to move much further into the oversold region, even if they are already oversold. I tend to find the MFI obeys price action incredibly well. And that's what you can see has been obeyed perfectly on this level here, this level, and this level as well. Very importantly, one of the last big points that I have to mention is this position is a seasonal trend. So as you can see, based on the period separators on the chart, you can see that there's these dotted lines going all the way between 2017, 2016, 2015, and 2014. What this helps us clearly identify is exactly what dates has been the new year, so whenever the new year has changed over. Now, something I've identified that has happened very similarly is that the very strong sell-offs usually happen right in the beginning of the year or right at the end of the year. So as you can see, point number A, you can see that sell-off starts off very early in the year, sort of just in March. You can see the second time round, the sell-off starts sort of on the 10th of the month. So there's only 2 months left of 2014, and there's already a massive retracement moving back in 2015. You can see in 2015, point B, the sell-off starts once again at the beginning of March. All the way down, you can see the sell-off moves all the way to the bottom, kind of rejects this price level, moves up a bit, and you can see kind of rejects, it's in the middle of the season of the year, and moves all the way back down to reject the price again on the 9th month of the year, moving into the last quarter of the year. As you can see again, it goes all the way up to the top and rejects price on the resistance level at, once again, the 12th month of the year. So what we're seeing is moving into these price rejection levels, the strong levels. You can see 4th month of the year, all the way up into the top here on the 11th month of the year, and then once again now we're sitting on the price rejection level on the 11th month of the year. What this helps us identify is that this trade is very seasonal. We're seeing incredibly strong pivot points on certain time frames, and what this is allowing us to identify is there is a high probability at the end and the beginning of the year we're going to see incredibly strong pivot points. So what you can see here on this position is that the stars are aligning on this position. Now, step by step, we're coming up with points where we're saying the MFI is oversold, the stochastic is oversold, it's at the limit of the average true range. The time period is in the exact maturity time, on the exact pivot point. In the beginning and the end of the year, these pivot points are occurring. So we know that there are multiple reasons why we know this could be a very strong position to enter into. Now, once again, like I'm going to say to you, this is just for educational purposes. I'm not trying to give you investment advice. I'm not trying to give you too much, convincing. But what I'm trying to say is this is how it's a great way to study long-term positions. Now, what I do know is 157 pips is the distance we're going to move inside this average true range. What I'll be able to know is 157 minus 1,300. My potential downside on the average true range is 157 pips. My potential upside is 1,150 pips. So I know my expected payoff, if I enter on the trade now, is a probable 6 times payoff. So I'm going to be risking X amount to make 6 times what my downside could be. But what I'm going to do is also include the maximal true range. What the maximal true range is going to do on the very right-hand side, you can see it's measuring from the very highest point of this range to the very lowest point. That basically saying to me, if all else fails and I think this position is going to move miles into the oversold region, which I don't think it will, what is my potential downside going to be? And as you can see, it's 585 pips. And the maximum true range is 1,850 pips in total. So what I do know is if price goes beyond the 157 pip level, I need to do some fancy footwork. And what I'm going to do is use risk management processes to do that. I'll do things like either hedging my position on the same asset or hedging against different assets. I'll make sure that I'm covering my position by not entering massive positions. So at least my account has a lot of room to move if this position goes into a much more oversold level. I also know that if the position goes down to that level, I'm going to be adding at significant levels of resistance. So I'm going to probably be adding a little bit further down in this position, and I might even add at the bottom. What this allows me to do is it not only allows me to reduce my loss, but it also allows me to increase my expected payoff. Because if 585 pips is the potential loss, and I average that out against the 1,300 pip average true range, that payoff is a 2.5 times payoff. So there's about I'll be making 2.5 times what I'm risking if I dip all the way down into that 585 pip region. So that basically allows me to know exactly what I'm walking into on the position. Once again, everyone, like I said, this is all for educational purposes. This is to help you as much as we possibly can and give you some input, give you some advice. If you would like to get hold of us, if you are interested in learning about how to trade and invest, learning about what we actually do, you are more than welcome to get onto my website, msequitiestrading.com. We train students all around the world. I've built a very specialized online training academy where I train students all over the world. I also do private coaching over a 12-month program for them. All of the links down below in the description. Hope you really enjoyed this video. Please give it a thumbs up if you like this video. Make sure to give it a subscribe to keep updated with all of the new content coming out. We're coming out with some very important and interesting new content very, very soon. So make sure to keep updated. Once again, everyone, hope you have a great week of trading. I'll see you in the next video. Cheers for now.